Good afternoon, everybody. It's nice to be back in the leather industry after a long time. And I'm really grateful to all of you for giving me this opportunity to address you. The subject today is the impact of COVID on the leather industry. And in these 30 minutes, I will take you through a few slides to show you some of the significant impact that the leather industry is likely to have. COVID-19 has affected all countries in the world. This is the first time that we've had such a large-scale problem. Usually it is in one geography or in one country or a group of countries, but this time it's affected more than 180 countries in the world. This is perhaps the worst economic period after the Great Depression of 1930. GDP rates, which were around 5-6% in India, 3% in the Western world, will definitely go in the next quarter to -3 to 5% worldwide. Even the IMF has predicted this will happen. And more important, things will never be the same again. This is a big takeaway from this COVID crisis, and almost all experts over the world are saying that things will never be the same again. The problem with the COVID crisis is that we are 4 months into this crisis from January, and till today, we do not know the real extent of the crisis or the damage that it will cause to the leather sector worldwide. Nobody is able to even guess where it will end and what will happen to the leather industry. So what is the impact? Lockdowns and restrictions are likely to continue till June 30. I have been speaking to many people in the government and others. Although the official date now is May 3, they are saying that we can expect severe restrictions almost up to the end of June, and only after July things may get back to normal slowly. This may get extended if the second series of COVID-19 comes in, as it has happened in Singapore recently, and many countries are wary of this now. The problem in our industry is companies carry large inventories of raw material and work in progress at the moment. Customers are canceling orders. More than 40% of them have canceled. Some have canceled more. And orders for next season will be very muted, that is for winter. And there will be, result of all this will be a severe pressure on prices, severe pressure on credit terms. Many customers may go bankrupt or get taken over by others. And there will be a severe crash crunch for manufacturing companies in India. This will be the impact that we are almost sure to see. The next question is, what should the leather industry do? First, we need to learn to cope with at least 30% reduction in the orders. This is absolutely certain to happen because the spring-summer goods itself have not been delivered yet to the customers. They should have all left India by now. After Easter, normally nobody accepts anything, but now they are all cancelled or work in progress in India, and nobody knows what to do with them. Customers, on the other hand, are already holding huge stocks. Their stores are closed and they don't know what to do with the existing merchandise which they could not sell for the last 2 months or so. I read a recent report that Zara, who is a very big retailer, one of the largest in Europe, has closed 4,000 stores in their chain. Marks and Spencer's directors have issued a press note that their operations are also very severely affected. So they hold stock, they have stock with the suppliers, they don't know what to do, and now we are thinking of the winter season. So for sure, not only this winter, but next summer season, the purchase will be less than 50% because they have to close stock of the existing season. So this is going to be something that we have to be careful about, hoping that next summer will be fine. It will definitely not be fine. We need to cut costs very aggressively from today. Many people in the industry are using a wait and watch strategy, but I think that needs to stop now. We have been watching for 4 months from January, and at this time we need to take decisions relevant to each company so that they can protect their own interests and the business that they are into, whether it's any form of leather products. The third thing is to cut inventories by at least 25 to 30%. In fact, my suggestion would be to cut 50%, but the least that they have to do is aggressively get rid of material of at least 25%, even if you have to sell it at a small discount, because as time goes by, the value will drop even further. It is not something that in my present company where we are selling land, it's like wine, and the longer you wait, the price will appreciate, but not in our leather industry. Prices will drop. and it's better to reduce inventories by at least 25%, if possible to a larger extent, going up to 50. We also need to shrink business and wait for 1 year to recover. This is again very important. I was just talking to some people today, and many of our previous generation entrepreneurs in Tamil Nadu who were large tanners who were doing very well, they followed this strategy. Whenever there was a major recession or a downturn in the market, they would collapse all their operations, operate a bare minimum level, have a sort of a holiday, wait for things to get by, and then start again after 6 months to 1 year. I think we need to learn lessons from these people and go back to this strategy of shrinking the business and wait for 1 year to recover. Almost certainly there will be probably one or two people who will be able to produce at last year's level or marginally higher, but those are real exceptions and not the rule for the average industry. More important is a coordinated strategy for the industry is very important to avoid competition amongst ourselves. Here again, if one company offers 20% discount, another company offers 5% discount, we are in fact killing ourselves. My suggestion is that we sit together as friends, discuss amongst ourselves a coordinated strategy of what we are going to tell our customers very soon, in another 2 weeks or 3 weeks, rather than fight amongst themselves or reduce the possibilities of gaining the best advantage and getting the best out of the customers in a very severe situation. In all previous cases where we reduced prices, the problem was only on the customer side. We had recessions. Sometimes the winter was very bad, or winter was too late or too early, and so on. Or there were other problems in those countries where the customers used to consume our products. But this is the first time in probably 50 years when all of us have a problem. This happened only during World War II. The customer has a problem, we have the problem, and both have the problem to the same extent. This is a very unique situation. And therefore, when customers ask for prices, we need to tell them this very clearly, that this time the problem, I am having the same problem as you have. And the extent is the same. So you can't expect much out of us to sacrifice our margins, because we have equally big problem here. And this time suppliers are also suffering to some same extent. All factories need to explain this in one voice and their inability to reduce price. Explain to customers that price reductions will severely hurt viability of most of these companies. It's now come to the bare bone costing, and further reductions will only hit the survival of these companies. And here a coordinated strategy is good for the industry to pass this on to customers and convey in one voice what we have to say from India. The other problem now will be the request for extended credit periods. You know, when we are giving 30 days credit to a customer, they will say, give me 90 days or 120 days or 180 days. Here, I wish to warn you that number one, while interest rates are 10 to 13% in India, it is only 1 to 2% in the overseas market. With all the banks stepping in those countries, credit is almost available for free. In the US, it's almost zero. In Europe is again the same. So they can easily get credit for 1 to 2% interest in their markets, rather than us getting it at 10 to 13%. So also banks are hesitant to lend not only to any industry, also to the leather industry. And therefore the strategy, and there is extended credit, means that there will be a risk of non-payment by the customer. In these, if you give 180 days, he may not even pay at the end of 180 days there. So the takeaway for this is, it is better to tell the customer that if you do need extended credit, you please borrow from your country, but you charge me that 1-2% interest for 60 days or 30 days. I will pay that 1-2% rather than my paying 10 to 13% by borrowing in India. This is something that needs to be conveyed to the customers and explained to them, so that both are winners in this game. Next, we come to order cancellations. The level of cancellations is unprecedented this time. Usually we had small cancellations. We were normally at the end of the supply chain in India, and cancellations were maybe a few thousand pairs or 1 or 2 orders and so on. Now it's at least 40 to 70% is the extent of cancellation of the current summer merchandise. Other problem is claims will also increase when goods do not sell. This is normal in our industry when things don't happen. they will find some excuse or the other not to pay. And if this issue is not resolved by many companies, many companies will not have the money to buy fresh raw material. If you don't get the payment, where will you buy fresh raw material? Therefore, the takeaway here is factories and industry must negotiate amicably to persuade customers to accept goods at cost price and not cancel orders. We have to tell them cancellation is not a solution. Yes, you can work out an amicable solution, and the way out is next year for some summer, they will have to do a carryover inventory, hold it, we can hold it for some time, do a carryover, not introduce too many new models, and then get over the crisis both from their side as well as our side. This is an important point to think about and work together as an industry. Next is the bankruptcies in the Western world. Many shoe buyers and department stores may go bankrupt or get taken over by larger companies. This is already happening now in the Western world. Share prices have dropped by 40, sometimes even 50%, and therefore takeovers will be the rule of the day. Our industry needs to be proactive to watch for early signs of such events. Takeovers are risky in our industry because when the new owner comes, he says, I don't know anything about the old owner commitment, and he will not respect any of the commitments of the previous owners. This is our problem in our industry. And how do we get over this problem? Because the industry will go through a complete change in the Western world, both from retail and wholesalers. So, but we have to get information timely to take action. But there are excellent financial reports you can get done in bad sheet, but even better than cheaper than that and quicker than them are regular financial reports from agencies like this in a company called Endole. If you pay between 10 and 50 pounds, you can get report of any company online, and you can get it even today. You can get a company's report. They're very good agencies, and any changes in the company, they will send you a message, an email or a SMS, and then you can update your pay 5 or 6 pounds and get a updated report. So you can keep track of those companies and take corrective action as and when required, rather than hearing that they have gone bankrupt tomorrow. I would also suggest that here we can do this on a combined basis. This is common information to be shared by all the companies in India, and perhaps we can do it through one of the institutions like CLRI, or even privately with 4 or 5 entrepreneurs getting together, pay the money, and then share the report across to our manufacturers, especially the smaller manufacturers, and let them take their own decisions. But information should be provided to them so that they can take appropriate decisions rather than know when it is too late. The takeaway for this is diversify the customer base by revenue and geography. Our normal rule is not more than 20% with any single customer, and spread in at least 2 geographies, that is the 2 hemispheres rather, as fast as possible, and not take the risk of putting everything with M&S or Europe or Zara or one country or one group of countries. That is going to be extremely risky now in the next 1 year. Reduce business when you see the first signs of financial stress with this customer. Whenever you see there's some problem of small delay in payment, talk to customers, you will get an idea, and listening to them very carefully, you will be able to assess what is happening. And therefore, you can take immediate action of reducing the business with them with some excuse, rather than supply a lot of goods and not have payment being given to them. And this can be done very well. In fact, many years ago, when I used to travel in Europe, it was the car driver from the company who used to give us the best information about the financial affairs of the company, because he would talk, and if they knew English, they would be able to tell us, oh, the factory is not painted or is in bad shape. These are indications that they are not doing well. And therefore, we can be careful about dealing with these companies. Most important is now in the next 12 months, I would suggest not to sell without a secure payment system in place. Either you do it on cash against documents, or you do it with, with insurance cover in place, or you do it against an LC. But don't send open documents to any customer, irrespective of your relationship over the past 20, 30 years with them. This is going to be very risky, and it will be suicidal to do that, because any company can go under tomorrow. And sending open documents to customers could be disastrous, at least for the next 1 year. It is better to lose orders than supply without a secure payment system. Foreign banks will help their own customers even if our documents are in order. The famous ones are the Japanese bank. Japanese banks all over last 30 years I have seen, if there's a discrepancy in the LC, they will always support the Japanese customer. Italian banks are just the same. And therefore, we have to be doubly careful that we try and get LCs transferred to an Indian bank like State Bank of India, even though it's opened on a foreign bank, and then negotiate through the Indian bank, because otherwise any small discrepancies, customers are likely to take advantage. That is the important thing. I here give you an example. In Tata Steel, they used to follow a system of taking a retired person who was dealing in the LC department of a bank, and whenever there was a document, the retired person would come to the office for half an hour or 1 hour, check documents before submission to the bank, so that the whole thing went through perfectly. You pay them a small fee, and these people are available in Chennai. Many of them are experts in this field, and it's better to hire the service of a professional before negotiating documents to make sure that you pay them a couple of thousand rupees and they would be happy to come for half an hour or 1 hour, check the document, give it to the bank, and make sure that the documents are in order rather than make mistakes and regret it later. The next issue I wanted to talk about was the inventory levels in the Indian industry. By and large, inventory levels are very high in our industry and not sustainable at present. If you look at 10 companies and look at the inventory per 100 crores of turnover, there will be a huge variation, and it is extremely high. You will find even for 100 crore turnover, there is perhaps 60, 70 crores worth of inventory. These are very, very high. It should be more of the order of 30, 35, whatever is the raw material required for that 100 crore turnover. So our levels are very high, and banks have now become very rigid in lending. Although the RBI speaks of increased liquidity, flexibility and all, in practice, the banks are very wary, and funding is becoming more and more difficult in the present time in India. If you look at the footwear industry, typically when I was in FTDI, we used to do an analysis, and we found that if you put in an investment, it is an industry with low investment in capital, but with a high turnover and a low margin. So if you typically put 1 rupee investment, you should get a turnover of 4 rupees. And even with a 5% margin, you can get a 20% ROI. This used to be the way the industry used to work. Earlier times, we used to have the benefit of depreciation of the rupee. That is the devaluation of the rupee. Raw material prices and other used to increase by 2%, devaluation of 6%. So we could still manage. But those days are gone now. You can have anything happening to the rupee. And therefore, it may be, it is unwise to depend on the rupee devaluation at present. And in reality, the margins are close to zero or negative due to high inventory or a large receivable. I want to explain this. Suppose you have a 5% margin, but instead of 1 rupee investment giving a 4 rupee turnover, you have only a 2 rupee turnover. And even if you have a 2% margin, it's only 4% return on investment. So if the inventories are high, then you will not get the adequate 4 times multiple that you need to get, even with the margins of 5-6% that we have in our industry. Please look at this carefully and evaluate and recheck to make sure that corrective action is taken immediately. Unless inventories are reduced, survival is going to be very difficult. This is definitely, it would be nice to see what happens, but I think this is the only way we can get through this crisis. The other aspect is the cash generation in the business. I have seen in many companies do not rigorously compute the actual cash generated every month. They do a P&L account, but many times there is maybe even a profit in the business, but the cash is gone. There's no cash available in the company because that has gone into inventories or receivables, and there's no cash being generated. In today's time, cash is king, and you need to look very rigorously to get a cash statement every month that what amount of cash did I generate in the business. And if it is all going into inventories or receivables and all, please take corrective action now. And get a chartered accountant to do a cash generation for you if you are not able to do it yourself, of what is the actual cash generated, especially for small companies, and take corrective action now to see that you are generating cash in the business. Otherwise, it's a loss, and we may not know the true extent of the loss until it's a few months too late. The banks in India are now looking at this very carefully, and we need to compute rigorously and take corrective action whenever required. There is need to have strong and meaningful metrics to measure the business. This is one area where I feel our industry is lagging. We don't have good, meaningful metrics to measure the health of a business in our leather industry. The best company in the world that I have seen for metrics is Amazon. With such a large enterprise, they are able to measure their sales by the hour. Every hour they know what is the sales globally, every hour, 365 days in a year. And the type of metrics and the attention they pay to metrics, I have not seen any other company doing that. And we need to get maybe some of you together, or we can have standard metrics and develop even a small dashboard for the CEO of the companies for him to see what is happening with his business every day. Good metrics and not motherhood metrics like quality is good. These are what we call motherhood metrics, or customers are happy. Unless you have measurement metrics for happiness and so on, it is not having any meaning whatsoever. So it is now time to have very good metrics being put into the business to measure for yourself. This is not to show anybody else, but it is for your own self-assessment and taking corrective action so that you can correct anything that is going wrong or that needs course correction in the business. The next question is, how do we deal with this crisis? There are two aspects to any successful business. One is running the business, which we do on a day-to-day basis. And the second one is changing the way we do business. In the current crisis, the changing the way we do business becomes very, very important. We need to measure and record the changes made to the business. And companies that do not change are less likely to cope and survive. This is again very, very important. Changing how we do business is going to be, every month you need to ask yourself, what are the changes that I made to change the way we do business? I can tell you from my personal experience, because in my other job which I took after 2006, we had the Lehman Brothers crisis of 2008. And if we had followed the traditional models of industrial park developers or real estate people, we would have collapsed long, long ago and closed the company at that time. But we put our heads together and said, what should we do differently from the rest of the industry? People laughed at us at some of the measures, saying it was unreasonable or unworkable and so on. But many of the measures really helped us pull through, and later on helped us consolidate and become better than our competitors in the industry. And I would urge you to please look at some of these changes that you need to make in the business. Take help of other people or friends and so on if you need help, and do it. But changing the way we do business is very, very important. I want to digress a little bit there to come to my own personal experience in the industrial park development of some of the ways we changed the way we did business after the 2008 crisis. All over in leather industry, in the real estate industry, they take 500 acres or 1,000 acres and they develop the whole park, start building the fence. The first thing they'll do is, in any project, is to build a boundary wall. A boundary wall would have cost us maybe 500 crores. So we said we will not have a boundary wall at all. We have all the land documents and we have a security team. We will put a chain link fence where there are issues, but we will not do a boundary wall at all. Everybody says the first thing, even the government asked us why. We said, why? What are you worried about? It's our land and we know how to take care of the land. We will not put a boundary wall. So that helped us save almost 500 crore rupees in building on a 7,500 acre campus. If you have to build a boundary wall, you can imagine the costs. And then we started developing only in small phases of 200 or 300 acres at a time. Unlike the Dubai model where they develop all the 7,500 acres and wait for 3-4 years for the customers to come, because there they had the money, they were rich, and they could afford to wait with low interest rates. But in India, we could not do that. And we said, no, whatever happens, we will keep the land as it is. And we, in fact, gave it back to the farmers to do agriculture on that land, some parts of the land, free of cost. And he said, whenever we want it, we'll take it back to you. Farmers were also happy. And we did that. The other thing that we did was, we didn't all real estate parks, including the Mahindra World City Park had Infosys as the anchor customer. They said you must bring an anchor customer, and then he will then bring a number of other customers into the business, and they will give you credibility and so on. And the anchor customer invariably was sold at below cost, which was happened when Infosys took the land from Mahindra also. It happened there also. We said we will not do the anchor customer, irrespective of what happens. We will not do. We will take customers as they come and not sell below cost. And this succeeded. Until today, we have never sold below cost, and we never had the anchor customer. But yet, we are much better than the other people. That is again a learning that we did differently from other people. The third one is a very important lesson. We had a huge water shortage, in Chennai, a few years back after the floods. So then we said, what do? We are very close to Chennai. So we said we must do something. And we developed a unique rainwater harvesting system. And today, you will not believe it, but we store 900 million liters of water in open storage. Yes, there is a small evaporation loss, but even after that, 900 million liters, or 6 months of our supply is guaranteed and is given by God. And you know the value of this at 60 rupees a KL, it comes to 5.5 crores. And 2 times a year with the 2 monsoons in July and December, we are able to get 1,800 million liters of water, which is 10 crore income by conserving water and take God's given gift and using that water free of cost, which we would normally have to buy. This is again another way of changing the way we do business. Number one, our water security was improved. We started gaining 10 crores a year, and today we are happy that we don't have to, even everything fails, we have got water in our place. And all we did was to just capture the rainwater and put it properly through canals and store it there. Gujarat has also done some experiments on these lines, as the government did, and they have also succeeded in this. In 2009, I personally remember we had 7,500 acres of land and no bank would give us even a 50 crore loan. That was the condition of the industry just after the Lehman Brothers crisis. And we had no money to even do development. So we were forced to conserve cash, and then we went to private equity. We said we will go to private equity, build the whole project on equity rather than on bank funding, which was against the norms of what everybody else used to do. Many of the highly leveraged real estate people just went under. You have Marg, you have many people, I don't want to mention name, but many people went under because they had high leverage with the banks and they just went under at that time. The other thing that I can give you, though it's not so relevant, is that our sewage systems do not have any work underground. No sewage tank is there underground. This we decided as a mandate at the start. And therefore, there's no death of asphyxiation, somebody going in to clean the tank, all that is gone. The whole technology has changed and we have not had any accident, touch wood, so far in the last 10 years. And it didn't cost us very little extra money that we had to pay. But the peace of mind and the fact that it is completely safe completely changed the way we did our business there. When you come to roads, we do roads to the national highway standards, to the central national highway standard. But with some innovations, we are able to do it at less than 50% of the normal cost by innovating on the construction methodology. I am not able to go into details at this time, but we are able to do much, much cheaper than anybody else and the same quality of road as the national highway. And we have been very happy with this methodology that we found, and we do that. This is again a way we change the way we do business in difficult circumstances. The other point I want to make is even small companies, we are not a very big company in that sense compared to big developers in India, like Ambani's or Piramals and so on. But small companies can also beat the giants if they are proactive and innovative. You look at Parry. Parry, I think, started in 1771, Parry and Company, and they have survived till today. What they did, they started off with perhaps at one time Parry was to do liquor. They had a lot of other businesses, and then they went into ceramics. They were exporting material to UK. They were not manufacturing anything in India prior to independence. Then they went into ceramics. They went into a lot of other things, but constantly they have innovated, changed the way of business, and today they have survived. Very rare for a company to survive from 1771. Nokia is again another example. Originally into rubber, then they went into footwear, then they went into telecom, they went into so many different businesses. by changing with the times and changing the way they did business. And today is one of the most successful companies in the world. So this is again something to remember, to keep in mind, that can you do something to change the way you do your business? Even small or big, everybody can do tremendous changes which can change the way we work. The next important question is, can the leather industry survive? My answer is yes. The previous generation went into hibernation during periods of recession and shrunk their operations till conditions improved. This is a very important lesson I think we should all learn from the previous generation of entrepreneurs. Very at this time of the COVID crisis, we should seriously think about this strategy that they used. Our productive levels have improved, and today we produce, I don't know if you know, we almost produce 3 million pairs per month of sports shoes for export, done over the last 5-6 years, both at Cheyyar as well as in near Tada with the Adidas factory there. They produce about 1 million a month, and the Cheyyar facility produces close to 2 million. So from starting from nothing, we have still survived, and we make 3 million pairs profitably. And the productive levels in these factories are comparable to China, equal or marginally better than China. In fact, we have a solar manufacturer in our place from China, and the CEO keeps telling me that productivity has been better than China in India. So the days where we felt our productivity was low is gone. There are improved methods of training. People are smarter, better educated from the schools in our villages and so on, and they're doing better. We have a company, Japanese company, and they had a factory in Jaipur, and they said the Andhra facility was much better in productivity than even the Jaipur facility that they had. Other thing is, in a leather industry, many people feel that you have to keep growing in size, in volume, turnover, etc. Maybe good to talk about, or show that we are doing well, but it's not necessarily a way to succeed. Small companies in leather industry especially, scaling is not necessarily the answer to grow. Small companies can go to niche markets or create new markets for themselves. I would cite the example of Tom Shoes in the US. There are many examples there where even if you are small, you control your operations better. When you become very big, people lose control of their operation. This has happened in many leather companies, many leather companies. When they were at 50,000 square feet a month, they were doing brilliant work. Every piece the owner knew, and they were absolutely sure of what they were doing. When they went to maybe 500,000 square feet, the controls were lost or diluted to a large extent, and they were not able to do the same there. Italian people practice this methodology, and again, this is something that we can look at. Also, we have been able to cut inventories aggressively. You look at Mr. Pucci Dante, many of you must be knowing him. He has a factory now in Maraimala Nagar. I spoke to him even a couple of months ago, and I have seen his factory once. Even today, he has negligible non-moving inventory, negligible. And that is really something aggressively has been doing right from the beginning, even when he was an associate with Tata. He knows how to control his inventory, just have what he needs, and he is able to control. If somebody can do it in India, in Indian conditions, others can also do. This is a lesson that we need to take. We need to be diligent about customer transactions. And this is again where Pucci Dante taught us a lot of good things. You know, we are very forgiving in our country. When customers say, I will give you a forecast on 10th June, and he gives it on 20th June, we don't even say anything. We are thankful that at least he gave us a forecast. But Pucci Dante would record this and say, no, you gave me 10 days late, so my delivery will also be 10 days late. Like this, he used to accumulate credits from the customer for, for sole orders, and or take a guarantee on sole orders, etc. And never shipped anything by air. He was always shipping by sea. And it was not that he was not having delays. He used to also have delays, but because he had all these credits of mistakes of the customers, accurately recording them and making sure that he got the credit for it, he was able to make sure that he did not air freight. A good lesson to learn from a man who practiced this for the last 10-15 years. In terms of IT tools, I feel in respect to planning and operations, we are not in line with the best in the world. Lot of area to be covered. I have seen this in my own industry now. We are way behind, and therefore there is need to really step up the IT work and get help from expert to really use IT effectively in our operations. We are using it, but we haven't got the full benefits of IT and so on. You know, you can have a 500, we run a company with maybe 2, 3 people in HR. That's all. And the total staff that we have is about 15, 20 people in legal, accounting, marketing, and so on, because the rest of it is all IT enabled. And even in construction in 2008, 2009, sitting in my office in Chennai, I could see concrete being poured, any aspect of construction. I didn't need a construction report from the engineer. If he said concrete was being poured, I could see him on site and concrete was being poured. So those are things that we need to change. And developing, as I mentioned earlier, meaningful metrics for businesses and monitor them well is another important aspect. This is a report today I saw from very respected organization called Forbes in the US. And this is what they have said, what will happen post-COVID with the retail industry. They say that consumers will have adapted short-term behaviors during the pandemic that in many cases will become a permanent habit. Second, consumers will emerge from the pandemic in a new economic reality, changing commerce behaviors in profound ways. A significant consolidation of retailers will fundamentally alter the competitive and partner landscape. This is not our prediction, it is Forbes, which is saying that post-COVID, things are not going to be the same, and this is going to be the shape of the retail industry globally, especially in the Western world. Thank you very much, and for your time. I think I took a little more than 30 minutes. But if there are any questions or anything you'd like to explain or elaborate on, please go ahead.